Are you comfortable?
As comfortable as I can be. I'm so not used to one-on-one attention, so.
All right. Door locked.
Are there breaks in between or pauses, or is this
We'll
flowing?
make it very casual.
Okay. Okay, perfect.
Hello and welcome to Smart DZ Presents Keep Talking with Ananta. In today's series of podcast, I have a very distinguished guest from mortgage industry. And her name is Arlene Serrano. Arlene, did I pronounce your name correctly?
Yes, Arlene Serrano with 38 Mortgage here in Raleigh, North Carolina.
Fantastic. Welcome to the show.
Thank you.
How do you feel talking about finance and mortgage industry in general?
I feel great about it. Let's do it.
All right. I would like to get from you today is your perspective on how is the mortgage industry doing as of today? What is the significance of 38mortgage.com, which is the company that you own, in Triangle area? And I would like to begin with, what do you do at 38 Mortgage? Tell me about your company. Tell your audience about your company, what you guys specialize on.
Okay. Well, 38 Mortgage is a woman-owned local mortgage brokerage. Mm-hmm. A mortgage brokerage is significant in the terms of we shop for the lowest rates among multiple lenders. So we provide more options to our clients. It's very important in this type of market where the interest rates have taken a significant hit and have increased. I think we hit our highest interest rate spike in October of 2022 at 7.375.
Yeah.
But as of today, it's dropped about 0.5%. We do have the Fed Reserve looking at and making an announcement on Wednesday. So we don't anticipate another rate hike, but it's possible that it could happen up to 0.25%.
Okay, even in today's condition, when they say that inflation is being taken control of now, the rate could even go 0.25% up. That could
possibly.
go. Possibly.
If I'm reading it correctly, the experts are saying that they don't anticipate it, but you never know. So I don't anticipate more than 0.25% if they do apply a rate hike. So
okay, you talked about client. When you say client, who are your clients? Who do you work for?
Okay, so our clients are first-time home buyers, current homeowners. And when I say current homeowners, they could be listing a property that they want to sell. Maybe they are downgrading to a property. They are empty nesters, or perhaps they're upgrading into a bigger home. They're having, more children. They need more space. And current homeowners also include refinance options in a better market. Today's market, we could support a refinance if anyone's interested in looking at a cash out refinance to tap into equity, because today is the day for equity, obviously, with the home prices. But yes, first-time home buyers and current homeowners, that is our market.
Okay. We'll talk about first-time home buyers and current homeowners, trying to refinance in a bit. But then something that you touched upon is equity, right? What is equity? I have heard so many people now, flocking into social media sites like TikTok, Instagram, and YouTube and Facebook, and talking about equity line of credit. What does that exactly mean, and how is that significant? How has the equity line of credit become so important in recent days compared to the past?
So an equity line of credit is important if anyone's doing home improvements. They can tap into a home equity line of credit. But equity in terms of value is when your property value in your home increases, you gain equity from that. Because if you own a property that's, say, worth $400,000 and you have a $200,000 mortgage, you now have the equity between the two. The difference between what you owe on that property and the equity, what's paid off and what it's actually valued at, that is the equity you can tap into up to certain limitations with lender overlays and such. But equity is very important. Higher equity in a property signifies a very strong area investment. So that's what we're looking at today. Like the home prices being higher, most people are putting more down payment on the homes to walk into equity, avoid that PMI.
So if I had purchased a house in $300,000. Now the property value is $500,000. Even though I have a mortgage on my house for $250,000,
Right.
what is my equity then? What is my what can I get from that equity line of
Well, you
credit,
do.
and what is my value?
My apologies. You do have 250,000 in equity. If your home is valued at 500,000 and you owe 250,000, you have 250 standing equity. That doesn't mean that you can borrow 250 if you were to refi, tap into that equity, because there are limitations. Like I said, I think you can borrow up to 80% in some cases. With a home equity line of credit, you could essentially borrow up to 90 to 100%, depends on the lender out there and what their guidelines require. So.
Okay, so in that case that I just talked, $250,000 surplus from what I owe to a lender or somebody, that $250,000 is mine, and I can take a credit or I can take a loan from that entire amount up to 80-90%. From the same lender, or do I have to, can I go with anyone?
You, as a consumer, you can shop wherever you want to shop. The best rates for the best lender overlay that you can get. So if you want to borrow more of a percentage, whatever lender is offering, that percentage is probably what will draw you in. So.
Okay, so I'm not limited to any one provider, so to say, like a lender or a mortgage company.
Correct.
I can shop around.
Yeah, you are not limited. You have the ability to shop, absolutely.
And what does the percentage of interest looks like in comparison to the actual mortgage rate that are going today?
I mean, it depends on the lender. So home equity lines of credit do come with a higher interest rate, and they are variable rates. So if you're closing on a home equity line of credit and you're pulling funds from that line, it's based on the rate that you're pulling funds from that day. And it does vary, because you could maybe pull 10, 20,000 here. Let's say you did a line of credit of 100,000 and you wanted to just pull your first draw of 25,000. It's based on the rate from that draw.
I've also heard about people getting equity line of credit done with the bank, but don't pull the money out from the bank until you really need it. Does that impact on the interest I'm paying? Does that impact on any other things? If I wanted to borrow, $200,000 after $250,000, but I don't want to pull that. I want to have that done today, right? The bank would approve it, but then I don't want that money to spend until December. So,
Right.
Is that possible?
Yes.
Does that have any consequences?
Not that I'm aware of, but I'm not familiar with every lender's overlays, if they have particular guidelines that we have to follow. But with my understanding, no, you will not be impacted if you're holding onto that line of credit. They might have a guideline of, if you're opening a line of credit, it needs to be active within a certain time frame. But that's something that you would need to look into with your local lender that you're working with.
That's a great deal of information there. Now, 38 Mortgage, do you also provide equity line of credit?
We do. We do. We provide conventional loans. Those are conforming loans with Fannie and Freddie. We also do non-conforming conventional, which falls under the jumbo loans, which we're seeing a lot more of in this area since home prices have increased. We also do government-backed loans like FHA, VA, USDA, and home equity lines of credit.
So all of the services that you provided, some of them went on top of my head, right? But again, that's finance. It's tough to understand all of those things, and I'm not familiar with finance at all. I'm very, low percentile person when it comes to finance knowledge. So, 38 Mortgage, whatever the services that 38 Mortgage provides, is it all the mortgage companies? Are there all of the lenders? Do they provide all those services, or is 38 Mortgage is the only among few companies that do provide such services?
There are multiple lenders out there that provide the exact same products that we provide. We are signed up with a multitude of lenders that we shop with. Some lenders do some programs better than others. That is their niche market. When we shop for different loan programs, guidelines, and rates for our clients, we're able to put them in with the most appropriate lender and most appropriate loan program for their portfolio. So I would have to say there are There's nothing that we do that someone has not seen before with another
Gotcha.
lender. Doesn't mean that every single lender does everything that we do, but there are lenders out there that offer the same products.
Okay, but how are you different then?
We're
What
different.
are your specialties? Let's talk about that.
So products, unfortunately, because we can't create our own products, they're backed by either the conforming market or the non-conforming investors that we're selling loans off to. For us, I would have to say customer experience is what we prioritize. Long-term relationships with our customers. So I don't want to just be another bank number that someone calls in order to receive advice. I want someone to say, I know her, I trust her, she knows me, she knows my family, we're repeat clients, we know she's going to do the best job for us. I would say that that's our niche market.
I think you've already nailed it. I'd like to put a little bit of context here in that same, area you spoke about customer satisfaction, customer service, so much of delivering to the customer rather than just selling the product, right? When you came to us for your marketing, business cards, flyers, and all of those, smaller marketing type of things, then I found you guys very, very interesting, very, very receptive of the ideas because you let me have my creative freedom, From that day, the first day that I met you and your partner on your company, I had something in mind saying that I'm going to ask Arlene someday, we'll talk about this. And then if she agrees, we will have a small podcast with her. Now, you agreeing to that request and coming over here is a great thing for me. Thank you so much.
Thank you. Appreciate you.
Now, let's move on to the homeowners section of it, right?
Okay.
I am a first-time home buyer. I want to be a first-time home buyer, and I have zero knowledge about finance. I don't know anything, but I need to buy a house, or I want to buy a house. What are some of the things that I should do before even start to look at the houses, before even start to talk with anybody from the finance industry? What should I do to make myself, very sellable to the mortgage industry?
Actually, multiple things that a first-time home buyer can prepare for. The first being their personal finances. You obviously want to put yourself in a place where you don't try to overbuy in a home. If it's your first home, you need to understand how much can you afford. What does my payment look like? If I'm renting, how much time have I spent paying a landlord, paying their mortgage off rather than paying off my own mortgage? Two, you need to understand your credit score. Mm-hmm. What impacts my credit score? How much am I spending on my credit cards per month? We recommend that a customer not charge more than 30% on their charge cards because that will throw your credit score off. And it could take up to 60 to 90 days to recoup that score. Saving for your down payment. Mm-hmm. There are multiple options for first-time home buyers from 20% down. Obviously, that is very hard to do in some cases. A lot of people have that misconception that 20% down is the only option, and it's not. If you save, you have an option of 3% down. Mm-hmm. That's probably the most affordable home product that I would offer to first-time home buyers is the 3% down. It does come with PMI, which is private mortgage insurance, mm-hmm. Because you're taking out more of a loan with 3% mm-hmm. down. It comes with a higher risk, and so private mortgage insurance is applied for that coverage. There are multiple options: 95% LTV, which is 5% down options for first-time home buyers. I would recommend if you're looking at purchasing a new home that you save at least 4 to 6 months mm-hmm. In advance for your down payment. It's usually a 6 months payment. So whatever you're anticipating paying on your mortgage per month, save that amount, 6 months worth of that payment in order to be prepared.
Okay, so if my mortgage payment per month is going to look like, $3,000 a month, so at least, $18,000 or $20,000,
yep.
I should have cash in my bank account, mm-hmm. liquid asset, right. before I even, go around and then look at it just to be on the safe side, right?
Right. Yeah. If you're looking at a $3,000 payment per month, then that would be wise because you have to think about you've got your earnest deposit to start with when you're negotiating an offer on a home that you want. You potentially have due diligence as well. You have closing costs associated with your mortgage on top of your down payment. So it is wise to understand what your payment means and how much you need to save in anticipation of that loan.
When it comes to credit score, and we'll come back to the other portion of it, but let's get my head around with the credit score. What is a good credit score? What is a bad credit score? What is a moderate credit score?
Oh, all right. Good credit score, I would have to say, I hesitate to say 700, but 720 plus is a good credit score. Most lenders like to see borrowers above 680. There are loan level pricing adjustments between those two credit scores. Anything below 680, you're getting larger loan level pricing adjustments applied. That would be a poor credit score.
More, if I had a credit score lower than 680, for example, in this fixed scenario, right, then I may have to pay more. If the lender approves it, I may have to, pay more or put more down payment in terms when it comes to the loan, right?
Right. It's the benefit of the interest rate. So you'll end up paying more with a higher interest rate than would a person with a credit score of 720 plus. The same thing with, I believe the lowest scores that we're working with right now is 640 and above. There are lenders out there, which we are signed up with one. I believe they take 620. And there are multiple lenders out there who advertise no credit score, very low credit score. We haven't dropped down to any of those lenders at this point. We're pretty streamlined with this area. I'd have to say we're pretty lucky with the profiles we've been getting at 680 and above. So everyone in Raleigh seems to be doing a great job with their credit scores.
Awesome. And is that the reason that you guys, started your business here? What was a motivating factor for you to choose Triangle area?
So actually, Raleigh, we have had our eye on for several years. We lived briefly in Wilmington, and we came from Kansas City. But before we moved out here, we scouted a few areas. We were looking at markets and comparing markets. And Raleigh it came in as it's the fourth fastest growing economy in the U.S.
Wow.
Yes, and home prices are very stable. I believe they started at, or they landed at 420 last year is where they were on average. This year they're at 389 and staying steady. The national average right now is 357,000. So Raleigh is certainly coming in above the mark.
Great.
They have large corporations coming here, Apple, Toyota, and hiring jobs, technology. It's, the medical research triangle. It's just, there's so much opportunity, and the economy here is so robust. So that was the major reason for us making the move on top of the vibe. The vibe in Raleigh it's uncomparable. So we love it.
Tell me more about the vibes in Raleigh. You talked about it, right? What vibes you're talking about? What do you see? Because I see your face, it glows when you started talking about vibes.
So Raleigh has this, it's a large city. I'd say mid-sized city, but it has a small town feel. There's still a sense of community here. It didn't get out of hand. I'd say I think within the next, I think from today until 2050, we have about 500,000 population in Raleigh, and it will be growing about, I believe it's up to 1 million by 2050 is what I read on the statistics. Yeah,
that's
it's
almost
fabulous.
double, is it?
Yes, but I mean, just the opportunity here and personalities that we've run into. Everyone has that small town feeling, and it's that Southern hospitality. And we visited Austin. Austin's fabulous. That was one of the places we had scouted, and it did feel like a very, very large city, kind of out of touch, out of scope. But we absolutely adore Austin and visiting Austin. But Raleigh just came in top. It was just, didn't compare.
Well, fantastic. Thank you for choosing Raleigh. We live in Raleigh area.
Thanks for having
especially, us. Yeah, absolutely. And before you came to Raleigh, where were you situated? What was your life like before coming to the Triangle area?
Well, actually, we're from Kansas City. My life before that, my father was a chief petty officer in the Navy. So I moved, I'm a Navy brat, moved all over the U.S. I've lived in Canada for about 8 years. My husband is also an Air Force brat. He's been all over the U.S. and England.
Fantastic.
Yeah,
Oh my
so we are
goodness.
we're certainly travelers, that's for sure. But prior to coming here, I've had 15 years in the mortgage industry. I landed actually in mortgage in 2008 during the Great Recession, which is interesting because I got to see.
Interesting time you landed.
Absolutely.
2008 Great Depression.
Very scary time. The housing bubble, everyone losing their jobs, losing their homes. It was very, very scary. But I watched as regulation unfolded throughout the years. I was able to follow along. I was doing processing at the time. A lot of my work has been involved in the behind the scenes processing and the operations, moving into handling lock desk operations and working closely with underwriters. I have great relationships with our underwriters, which helps the loan process go very smoothly. And then I ended my career there as a compliance director. And I thought, it's time to front face. I'm not generally a front facing type of person. I'm great behind the scenes, great with the operations, which is very important. But getting up front with the customers it's very new for me, but it's very rewarding.
Awesome. So, so many great people who have achieved so much working in a company and have reached to higher positions like they at a stage of life, they say that, okay, enough. Now I'm going to go and then do something on my own, that where my passion lies, where my dream lies. What was the first thing that came into your mind when you even, say that, there are multiple levels of thoughts, we process before making any kind of decision, big at this one, right? Moving from one phase of your life to second phase of your life, or a different phase of your life. What was the first thing that came into your mind? Was it a fear? Was it an excitement? Was it an adventure? Was it a family? What did you think?
Well, I knew I wanted to do more than what I was doing. I had thought about going out on my own, and I was extremely fearful. I planned for 2.5 to 3 years this move. Had thought about how I would approach it, how I would tackle all of the tasks that involve setting up a mortgage brokerage. And eventually, the more that you think and absorb the idea, the better you feel about it, the more blocks and ideas you line up, and you start to realize that it's manageable. It took some time, but I'm going to tell you honestly, fearful, and then very excited, and then very fearful, and then very excited. So it didn't just stop
So
being
many
fearful.
stages of your thoughts, right? Do you regret anything on your decision?
Not for a second.
Not for a second.
Not for a second.
Let's say back in when you left your job and then started this company, stepping into your own business, if you had the same knowledge, idea, and all of the things, experiences that you have today, back then, would you still come into this profession? Into switch your career?
I would have done it sooner.
You'd have done it sooner.
I would have done it sooner. Had I had the feeling, I would say 5 to 7 years ago, I would have absolutely done it sooner.
So it's rewarding.
Yes.
Now, when it comes to reward, is it only financial rewards we look for as a human being that satisfies our need? Because, I see that people, when they work, they work for living. And once they pass that stage, then they work for luxury, and then they move, upwards in the hierarchy, right? What is the biggest reward for you? Is it family? Is it happiness? Is it your own, creative or your own work satisfaction, or is it the money? What satisfies you?
I would say all that thrown into one big rubber ball band. I'm very loyal with my family. I think the most rewarding factor to this brokerage is getting out, meeting the community, involving my family in it. And the number one goal, I would say, is just becoming the most trusted local mortgage brokerage. I want to be the go-to person that, you're comfortable asking the questions, you're comfortable getting the answers, and it's not just a 1-800 number that you're dialing to get a random person. making personal connections is ultimately, I think, the most satisfying. You get to meet multiple personalities of people
Yeah.
and helping them along the way. You've got, first-time home buyers, they're scared. They have, maybe they have a baby coming along the way and you help them into that home, or vice versa. You have empty nesters, they're sad, their, families moved on. And it's nice to be connected to those stories. And it's nice to be behind that, being the foundation for them to make that next move in their life. And so that's impactful. And then ultimately, the success of the brokerage, building that foundation and just knowing that it's productive. Everyone wants to be productive. And I don't think I will ever retire. I am a worker. I love to work. And I think that your mind becomes stagnant when you stop moving and you stop working. So ultimately, I think that's part of the rubber band of success.
Fantastic. Now, have you been like this for your entire life, from your college days, from your school days? Did you inherit that quality where work gives you satisfaction? This type of work gives you a lot of inner peace and pleasure. Were you like that, or were you completely different as a kid?
No, as a kid, so my father was military. So
Okay.
being a militant father, we were trained to be hard workers. And I mean chores. Chores did not stop. So I think that was something that was ingrained in me, of just hard work and dedication gets the results that you want. And when I don't feel that level of productivity, I have to up it a level and just apply more time and effort and energy into something until I see productivity come out of it. So I definitely would say that's ingrained in me as a kid.
Great. When I see you as as Arlene, 38 Mortgage, I see always a professional appearance. I always see, I hear good things from your voice. Whenever I ask something, you provide me professional suggestions. Now, that was the reason I wanted to ask you. What shapes people to become such a good human being, such a successful person? What is the definition of success for you? Are you successful now? Are you going to be successful? Or were you successful?
That's such a many sides. That question is many sides. Success, I would say I've had successes all throughout my life, and they don't stop. I think there's just different levels to success, or that's what fuels your ambition. When you stop becoming or being ambitious, I would say you've reached the pinnacle of your success. I would not say monetary success is always just the ultimate. For some people, it is. I think success for me is defined as ambition. And when that ambition stops is probably the day I'm laid in the grave.
You know what? Let's talk about the home buying process one more time, going back to home buying process. I'm a new home buyer. I'm going to be a new home buyer. And first thing that comes into my mind is that, somebody says that pre-approval is needed. What is a pre-approval? Why do I need it? And what is the significance of that in the entire process of getting my mortgage, closed?
Okay. Well, a pre-approval is actually very important. For one, I'll start with the real estate agent side. Any offers that come in with a pre-approval is taken more seriously. Anyone who comes in to make an offer and they're not yet pre-approved might hinder a seller's idea of this borrower now has to go through the application process, get pre-approved. So it may not look as nice of an offer as opposed to someone who does come in the door with a pre-approval. Now, a pre-approval is very simple. It takes just a few minutes. For our process, it's a matter of opening up your own account through our borrower portal.
Okay.
And that consists of providing your social security number, your date of birth, your name, and any estimated income that you would receive. Once that application is filled out, it's a very simplified application that we've made for our clients, so they're not going through a very sticky, hundreds of questions on an application. It takes on average 7 to 8 minutes for a client to fill that out. It comes back to me automatically, and I pull what's called a soft check credit report. The soft check does not hit credit scores. So each time you make an inquiry or you have someone check your credit, it could potentially drop your score. It's not guaranteed to drop your score, but it could. A soft check just looks to see this is your average credit score, and it tells every trade line that you've opened with credit report or with the creditors, whether it's mortgage, auto, credit cards, and then it spits that back compared with the income, the estimated income. Now, this is not verified income yet. This is not an approval from an underwriter. That's why it's called a pre-approval, is to get an idea of whether you could afford the home price you're looking at, the loan amount you're looking at, your down payment, and the payment that you're looking to get approved for.
Great. I was thinking about making this podcast a little bit more informative, but you provided such a great deal of information that's even it's beyond some information. We talked about pre-approval, we talked about credit score, we talked about the first-time home buyer. What are the preparedness that you can actually work on before even thinking about buying a house, or going out for shopping for houses and mortgages, right? And we also talked about equity line of credit. Listening to this conversation, watching this conversation, somebody would like to say, okay, let me get in touch with these people. This looks so professional, and they provide such a great deal of service. Let me try them. How would they land to your portal? How would they come to you? How do you want them to contact you to begin for professional services in mortgage, to initiate the mortgage in general?
Yeah, we have several ways. We have our website. There is a pre-approval option. I would prefer someone call me directly before they request pre-approval, because I'd love to have a conversation.
Are you sure you want that?
I do. I would love that, because, like I said, our goal is to create relationships.
The reason I'm saying that is because the world is moving towards automation, and all of the with especially after the introduction of artificial intelligence. Now nobody actually wants to talk with anybody, right? They want all the jobs to be done by machine. And you were saying that give me a call, let me talk to you.
Yeah.
So
I want to keep it traditional in a way of having conversations with clients if they're comfortable. We offer both options. Not all borrowers want to have a conversation with someone. So we do have the option on our website at 38mortgage.com. There is a Let's Get Approved button. Let's get pre-approved, excuse me. You press that button, it takes you right into the portal that you would set up your account and do the process that I just explained for pre-approval. And that email kicks over to me, and that would be my first time meeting this client who chooses not to call, which is perfectly fine, but I'll call that client once I have the pre-approval available, and we'll go over options. It's better to have the conversation with the client, because as a loan originator, you want to get to know your client. You want to know, what are their goals? What type of home are they looking for? What area are they looking for? What's their payment look like? What's their down payment look like? These are things you want to discuss. And it's a bit difficult doing that when someone's just automating. We do have the automation available for those clients, but it is better for your originator to know exactly what your goals are.
Well, I really appreciate you. Not for me, for everybody's benefit. This is so important these days, especially after COVID, right? The world has changed. It has shifted. I don't say it's changed, but it's shifted from one dimension to other dimension now. So human connection has become so important now, and these big companies are moving towards making all of those things automated and be handled by machine. It is very important to have that human connection, and I really appreciate you for taking a lead on that, especially on this case. And people aren't comfortable providing their information to the machines and the systems. It is very important that they talk with someone, they have that confidence that, okay, I talked with a real human being and she knows my privacy, he knows my privacy. Then I can be assured of my information not be leaked or sold anywhere.
Yes.
That's a great thing to know. I don't have any other things to talk to you, but I am guessing, I'm guessing that in the near future we will have more encounters like this, especially when it comes to different areas of mortgage and home buying processes, because this conversation is vague. Right? We talked about many different things. We went from this place to that place to that place to that place. I want to be more specific in the near future, whenever your time permits, whenever your company allows. Until then,
Wonderful.
Until then, I say thank you so much for your time, your positivity, and all the things that you've shared to our viewers, to your viewers. Do you have any closing remarks?
No, just thank you for having me on. This has been a great experience. This is my first experience, so I appreciate you interviewing me and letting me share information about 38 Mortgage, and we're here to help.
Oh, great. What are you going to have dinner tonight?
Surprise! I think we're doing spaghetti and meatballs for dinner.
Awesome. I'm going to have some chicken curry.
Oh, I'm jealous. Love it.
Great. All right. Thank you, Arlene. Thank you one more time. And with that, this podcast, thank you for listening, watching to it. If you're watching it on YouTube, Facebook, or Instagram, whatever social media you're watching it in, make sure if you have any questions, comment on it. I'll make sure Arlene gets it. And also, I'll try to see if I can put her phone number, her company's information in the comment or somewhere in the description section of this podcast, anywhere we publish it. Like I said, thank you very much for watching, and you all have a great rest of your day. I will see you next time. Keep talking with Ananta.